Welcome to the deep dive. Today we're really focusing on a company that's definitely been making waves and causing a lot of chatter. MicroCloud Hologram Inc. That's NASDAQ ticker HOLO.
That's right. And we've got, a pretty detailed set of materials here, the sources you gave us, which includes their recent 2024 20F summary, press releases, various analyses. Quite a bit to sift through.
And our mission today is really to unpack all of that for you, cut through the noise, and pull out the most critical points. So whether you're thinking about this as maybe an investment or you're just really curious, we want to highlight what the sources say really matters.
Yeah, think of it as us doing the heavy lifting, trying to give you the core insights from all this material. So where should we start?
Okay, let's start with the basics. According to this material, who is MicroCloud Hologram? What's their stated business and how is it, evolving?
Well, the official description from their filings and website calls them a technology service provider, and more specifically, a hologram digital twins technology provider, based originally in China.
Okay, hologram digital twins. And the sources confirm that their main business, the part actually making money right now.
Yeah, that's firmly rooted in holographic technology services. Things like LiDAR, digital twin tech, SDKs, software development kits, and intelligent vision systems. That's the foundation where the current revenue comes from, according to that 28 summary.
And this is where it gets interesting, right? The sources flag what they call a discernible shift in how the company talks about itself publicly.
Exactly. Well, the cash is coming from holography. The sheer volume of press releases tells a different story. It's almost a flood.
A flood about what?
Futuristic R&D, things like quantum computing, AI, blockchain. But here's the key thing the sources emphasize. These are consistently presented as research breakthroughs, developments, not as finished, commercialized products bringing in actual money.
That right there raises a huge question, doesn't it? The analysis in the sources brings this up. If the holographic business is the main revenue source, is it realistically big enough to fund all this super ambitious R&D in quantum, AI, and blockchain simultaneously?
Or is that R&D being funded some other way, like through capital raises, or maybe those crypto investments we'll get to later? That's a really critical distinction the sources point towards.
It really changes how you think about the company, right? Are they a tech services company investing profits in R&D? Or more like, I don't know, an R&D lab/investment vehicle.
Yeah, relying on outside money to chase these, very cutting-edge fields. The broad technology service provider label might give them cover, but the sources suggest it could also be obscuring a clear, focused strategy beyond their existing holographic work.
Makes sense. It feels like they want a piece of every hot tech trend. Okay, let's really dig into those technology claims because the sources give us a lot to chew on here. Quantum computing, AI, blockchain. Let's take them one by one based on the material.
All right, quantum computing first. The sources list several specific things they've announced. Claims about developing an end-to-end quantum classifier, nonlinear quantum optimization, quantum-enhanced imaging, even a high-dimensional quantum key distribution protocol. Quite a mouthful.
Yeah, sounds impressive. But they're described as developed or researched. What does the analysis say about, actual use?
That's the kicker. The sources highlight a conspicuous absence of solid proof that any of these quantum things are actually commercialized or generating revenue. It's quite stark.
Can you give an example?
Sure. That nonlinear quantum optimization. The source analysis says it lacks verified commercial implementation or revenue impact. Plain and simple. They're quantum clustering tech. Still in development phase with no immediate commercialization timeline. The QKD protocol for secure communication, also still in research phase. It's a recurring pattern in the material.
Okay, so lots of announcements, not much tangible output yet. This leads to another point the sources raise, the company's actual capacity to do all this.
Right. There's what the material calls a significant unknown about the R&D team itself. Like how big is it? What are their specific qualifications? The sources mentioned a pretty small total employee count, somewhere between, 46 and 64 people.
That sounds tiny for tackling quantum computing R&D across so many areas. Isn't that usually the domain of, huge companies or heavily funded startups with big teams of PhDs?
Exactly. The sheer breadth of the quantum subfields they're claiming, breakthroughs in algorithms, imaging, secure communications, even hardware research, raises what the sources call substantial questions about whether a company this size can realistically pull it off all at once.
Now, hold on. The sources do mention a big jump in R&D spending, right?
They do. A very big jump. up 121.7% in fiscal 2024, reaching about RMB 174.4 million. That's roughly $24.2 million USD.
Which is a serious amount of money.
It is. And it represents about 60% of their total revenue. That's an incredibly high R&D intensity. It definitely fuels their net loss and negative operating cash flow, making them very reliant on outside funding. But the sources also point out we don't know how that $24 million breaks down between the traditional holography work and all these new quantum projects.
So putting this quantum picture together based on the sources, what's the likely strategy behind all these announcements?
Well, the analysis suggests it looks like a strategy to position MicroCloud as a cutting-edge innovator. They often frame their work as overcoming existing limitations. But critically, the sources note these announcements usually lack things like peer review, independent validation, or even a clear roadmap to market.
And without that backing.
The risk, as the sources see it, is that these announcements start to look like they're mainly for market communication purposes. Trying to generate buzz, attract investors, maybe boost the stock price, rather than reflecting commercially viable progress.
That's a pretty sharp observation from the analysis. Okay, let's switch to blockchain and cryptocurrency. What do the sources say about their activities there?
Similar pattern, really. Lots of announced systems and algorithms, things like an edge storage system based on blockchain, a blockchain reconstruction solution, something called a hybrid public recognition algorithm technology based on Bitcoin blockchain, and even a quantum asymmetric consensus chain algorithm.
Quantum again. And the goals sound pretty ambitious too, right? Secure storage, better crypto security, maybe improving Bitcoin, protecting transactions from future quantum threats.
Yeah, the stated goals are definitely forward-looking. The analysis suggests some ideas build on existing blockchain concepts. Adding the quantum element might be future-proofing, or maybe just, leveraging the quantum hype. But again, the sources question the sustainability without clear adoption or revenue models for these quite advanced ideas.
So it sounds like they're focusing more on the underlying tech, the infrastructure, often with that quantum angle, rather than building, say, consumer crypto apps or launching their own coin.
That seems to be the focus presented in the material, yes. Positioning themselves in these advanced infrastructure areas. But the path to actually making money from them isn't laid out in the sources.
Got it. Okay, third area, artificial intelligence, specifically LLMs, large language models. The sources say they use the open source DeepSeek model and mention a partnership.
Correct. And they claim their edge comes from optimizing how these open source models scale and researching scaling laws, leading to what they call a new balancing mechanism.
But the sources point out a potential issue there, right? If it's open source.
Exactly. Competitors can access similar capabilities. That's the quote. So unless their specific optimization methods are truly unique and protectable, it might be hard to maintain a lasting competitive advantage.
And they talk about using this AI in their holographic stuff?
Yeah, integrating DeepSeek R1 into their holographic digital humans. But like the other areas, the sources note there aren't specific progress updates or timelines mentioned for actually launching this.
So the AI strategy seems to be grab a powerful existing tool, announce capabilities quickly, much faster than building from scratch.
Precisely. But the analysis suggests long-term success depends on whether their optimizations are truly defensible and if they can actually integrate and commercialize it effectively, especially given the open source foundation.
Okay, so that covers the ambitious tech claims across these three hot areas. Now let's pivot to the money side. What do the financials look like and how are they managing capital based on that 2024 annual report summary and other data?
Right. Let's look at fiscal year 2024. Total operating revenue reported was RMB 290 million, which is about $40.76 million USD. And that was up pretty significantly, 42% year over year.
Okay, growth sounds good, but where did it come from specifically?
The sources give a clear breakdown. The service business revenue, that holographic stuff, grew strongly, maybe 53 to 56%, hitting almost $40 million. But the product revenue, that fell off a class, down over 64% to only about $1.1 million.
So yeah, that confirms it again, almost all the revenues from services. What about the bottom line, profit or loss?
They reported a net loss. It was smaller than the year before, but still a loss. RMB 64.2 million, which translates to roughly $8.7 to $8.9 million USD.
And even with a smaller loss, the cash flow situation
tells a different story, yeah. The sources highlight that cash flow from operating activities was negative in FY 2024, about negative $13.7 million USD. So their core day-to-day business was actually burning through cash.
Okay, burning cash from operations. And yet, the most eye-popping number in the material, their cash balance surged, is that right?
Dramatically. Cash and cash equivalents ballooned to RMB 851.47 million. It's around $118.45 million USD by the end of 2024, a massive 575% increase.
Wow. Where did all that cash come from if operations were losing money?
That's the key point the sources stress. It overwhelmingly results from financing activities, not from operational profits. This cash likely came from issuing things like convertible notes and other share offerings mentioned in the material.
So they raised a ton of money, and we already talked about that huge R&D spend, the $24 million plus.
Exactly. That super high R&D intensity, 60% of revenue, is a major reason for the net loss and the negative operating cash flow. It really underscores how the business model described in the sources relies heavily on external funding right now, just to cover R&D and operational costs.
Okay, now let's tackle that cryptocurrency investment plan. That's a really big element in the sources.
Absolutely. They announced plans to buy up to $200 million worth of Bitcoin and crypto derivatives. Yeah, a very substantial amount.
Using what money?
Their existing cash reserves. The material mentions they had about $303 million in cash as of March 2025, which, as we just discussed, mostly came from financing activities.
Why put potentially 2/3 of your cash raised from investors into something as volatile as crypto? What's the official reason?
They call it a capital reserve strategy. The stated goals are enhancing financial stability and growth through diversification and also gaining market insights for potential future crypto-related business.
Have they made any money on it yet, according to the sources?
Yes, they reported about $8.13 million in total cumulative investment income as of late February 2025. But the analysis points out a crucial ambiguity. We don't know if that's realized gain actual profit from selling or just unrealized gain, meaning paper profit on assets they still hold. Big difference, especially with crypto swings.
Yeah, absolutely. And this whole strategy raises a major question the sources pose. Putting that much cash into highly volatile assets while also funding all this unproven, cash-burning R&D, it seems incredibly high risk, doesn't it?
The sources certainly frame it that way. Is it a desperate attempt to fund R&D with investment wins, a pure gamble, or some genuine, if risky, strategic play? The motivation isn't clear, and the risk is undeniable. The material also notes a lack of detail on how they're securing these crypto assets, which the analysis flags as another concern.
Okay, let's broaden out the financing picture. How else are they funding themselves? The sources mentioned convertible notes.
Yes, there was a specific $28 million convertible note offering detailed early 2025, short-term, 360 days. And the conversion terms look pretty favorable to the note holders, a 70% discount to the market price. The material suggests this kind of financing is fairly common for them.
And then there are the reverse stock splits. Lots of them recently.
3 major ones noted in the sources in quick succession. 10 for 1 in Feb 24, 20 for 1 in October 24, and then a big one, 1 for 40, effective April 25.
The stated reason is always staying above the NASDAQ $1 minimum bid price.
That's the technical requirement, yes. But the sources call these moves cosmetic. They don't fix the underlying business issues and are often seen as paving the way for more dilution, especially when you see them alongside.
The increases in authorized shares.
Exactly. The sources mention huge increases there, from $500K authorized capital up to $10, then way up to $400. That gives them the ability to issue a massive number of new shares down the line, which waters down existing shareholders' stakes.
And there was something about a dual-class share structure.
Yes, adopted in October 2024, Class B shares get 20 votes each, while Class A get just 1. The analysis points out this structure can concentrate voting control, which is often a governance concern for investors.
So looking at the whole financial picture, negative operating cash flow, big investing outflows, that huge R&D spend the sources talk about, a cash burn.
Great, definitely. They're spending much more than they earn from operations. The analysis concludes that unless something changes drastically, like major new revenue streams appearing or huge crypto gains, they'll likely need to raise more capital within the next, say, 12 to 18 months, just to keep the lights on and fund that R&D.
And just quickly, the sources clarified something about dividends.
Yeah, it's seen some materials mistakenly mentioned total accumulated dividends. The analysis corrects this, saying it should be total cumulative investment income, likely referring to those crypto gains. And the sources are clear. The company does not pay dividends.
Okay, so the financial narrative from the material is growing service revenue, but overwhelmed by high R&D burn, fueled by ongoing financing, plus this huge, risky crypto play. This brings us squarely to governance and risk. How strong is the oversight for all this ambitious, risky activity?
Well, one pretty significant concern highlighted in the sources is law firm investigation. Wolf Holdenstein announced they're looking into potential securities law violations by the company.
And the timing on that is interesting, isn't it?
Very. According to the material, it came right after a big drop in HOLO's share price, which itself followed comments from NVIDIA's CEO suggesting practical quantum computers are maybe 20 years away.
Which suggests the investigation might be scrutinizing MicroCloud's quantum claims and disclosures. How realistic were they?
That seems to be the strong implication, yes. The material we have doesn't include any official company response to this specific investigation, though.
What about the board's oversight, especially regarding that massive crypto allocation?
The sources point out a lack of specific information there, like, is there a dedicated committee overseeing crypto risk? What are the policies? The material doesn't provide those details, which the analysis sees as a gap.
And the expertise of the board and management in these highly technical fields they're diving into. Quantum, crypto, advanced AI.
That's flagged as another critical governance concern in the sources. There's apparently a lack of easily accessible public information. The material mentions no bio available for some key people that would show deep expertise in these specific, very specialized areas.
So making huge bets in fields where the leadership's relevant expertise isn't clearly documented, that's a concern raised by the analysis.
Yes, it makes it hard for outsiders to judge if they have the right guidance and oversight for these complex and expensive ventures.
How are shareholders reacting to things like the reverse splits and capital increases, and what's the general market vibe around the stock?
Well, shareholders have approved these major actions, the splits, the capital increases, the dual-class structure. But the market perception described in the sources is different.
How so?
It's often labeled a meme stock. That perception seems driven by the extreme volatility and the constant stream of press releases hitting trendy tech topics. The material doesn't show management directly addressing this label.
And that pattern the sources mention, announcement, price spike, then often a dropback that would feed into the meme stock or swing trade image, wouldn't it?
Absolutely. And while the press releases have disclaimers, the sources suggest the very optimistic tone, often without clear validation or timelines, could be seen by skeptics as more promotional than substantive.
Okay, let's try to pull this all together. Based on everything in the material you shared, what's the strategic outlook for MicroCloud Hologram? What should you, the listener, take away from this?
The sources basically conclude the company's at a really critical juncture. It's defined by that stark dichotomy we kept coming back to. The actual revenue source, holography, versus this highly ambitious, headline-grabbing R&D narrative in quantum, AI, and blockchain.
And those breakthrough announcements in the new tech areas.
According to the material, they're still lacking proof of concept in the market. No clear commercialization, no revenue, no independent validation reported. This raises really fundamental questions about feasibility and the company's ability to deliver.
And the financial strategy underpinning all this.
Described as aggressive and high risk in the sources, relying on financing for cash, planning that huge volatile crypto investment, plus the extremely high R&D spend relative to income. It's a risky mix.
And then layer on the governance concerns.
Right. The securities investigation, the questions about board and management expertise in the new fields, the repeated reverse splits that dilute shareholders, the dual-class structure concentrating power. It all adds to the risk profile described in the material.
So the market perception, as the sources describe it, is polarized, volatile, driven by speculation more than fundamentals.
Yeah, the overall outlook presented is highly uncertain and deeply speculative. That's the assessment based on the sources.
What are the biggest hurdles the sources see for them going forward?
Huge ones. Actually turning any of that R&D into real products that make money. Managing that massive crypto investment without blowing up. Keeping the NASDAQ listing without constantly resorting to more dilution. Getting through that securities investigation cleanly. And, maybe biggest of all, rebuilding trust with investors through actual results and transparency.
So if you're looking at this from a traditional long-term investment perspective.
The picture painted by the source material is one of a highly speculative profile. Long-term investors usually want clear paths to profit, defensible tech, credible management, transparent books, reasonable valuation. And the sources suggest many of those elements are currently missing or unclear here. The potential for big losses is highlighted versus a theoretical, maybe very unlikely, huge payoff if the breakthroughs are real and hit the market. The sources call it a very low probability, high risk proposition.
The main tangible asset seems to be that pile of cash, the $118 million or so.
True. But as the sources stress, the plan to put so much of that into crypto makes even the value of that cash highly uncertain and dependent on a risky bet.
So for anyone watching Haywar, what are the key milestones or signs to look for over the next year or so, according to the material?
Based on the sources, you'd want to see concrete evidence of commercialization. Real revenue from any of these new quantum AI or blockchain ventures verified independently. You want positive news or a clear resolution on that securities investigation. Signs they can stay on NASDAQ Q without more painful reverse splits or heavy dilution. And definitely more clarity on the crypto investments, the actual results, the risk management. Those would be crucial signals.
So, based on the material you shared, MicroCloud Hologram presents this really fascinating picture. A company grounded in holographic services revenue, but making these incredibly bold, perhaps overreaching claims in multiple cutting-edge fields, funded by financing and backed by a massive, risky crypto bet, all while dealing with governance questions and extreme market skepticism.
It really is a compelling case study laid out in these sources,
Yeah.
showing the dynamics between market hype, ambitious tech promises, complex financial engineering, and, frankly, significant risk in today's public markets.
It's a challenging story, and the analysis definitely emphasizes looking past the headlines and demanding real proof.
Absolutely.
Yeah.
The sources provide a strong cautionary note about needing independent validation and transparency.
Which kind of leaves us with a final thought for you, the listener, to chew on after this deep dive into the sources. In this world of rapid tech change and constant announcements, how do you tell the difference? How do you distinguish between genuine, hard-won innovation that's actually moving towards the market and strategically crafted announcements, perhaps designed more to capture attention and investment dollars?